Welcome to the University Research Center podcast for February 2026. I'm Corey Miller, State Economist from Mississippi and Director of the University Research Center. This month's podcast discusses the outlook for the Mississippi economy based on the latest forecast. Let's begin. In 2025, higher tariffs resulted in large swings in real gross domestic product growth from one quarter to the next. In the first quarter, we saw large surges in imports as businesses and individuals attempted to get ahead of potential tariff increases. In the second quarter, we saw almost an equally large decrease in imports. In Mississippi, the state was one of 15 where real gross domestic product expanded in the first quarter. Then in the second quarter, Mississippi was one of two states, along with Arkansas, where real gross domestic product contracted. In Mississippi, the agricultural sector caused most of the growth in the first quarter, while in the second quarter, the agriculture sector was the biggest drag on growth, resulting in the contraction. In the third quarter, Mississippi real gross domestic product expanded 4.8% at an annualized rate, and durable goods manufacturing had the largest impact on overall change in real GDP. In 2026, University Research Center's latest forecasts indicate that economic growth is likely to be similar to what occurred in 2025. The agriculture and government sectors are expected to be drags on the economy in 2026. Nationally, the One Big Beautiful Bill Act and developments in artificial intelligence are expected to offset much of the slowdown that is occurring due to higher tariffs. However, employment growth in both Mississippi and the United States is expected to remain relatively low. This is consistent with the low hire environment that we began to see last year due to the increased uncertainty in the economy, much of it related to U.S. trade policy. Only a few sectors added jobs in 2025, something that is likely to occur again in 2026. The U.S. Bureau of Labor Statistics, with its release of January 2026 employment data, revised its employment data for all of 2025 as well. U.S. payroll employment following the revisions was reported to grow at a rate of only 0.5%. This was the lowest annual growth in payroll employment since 2020. Mississippi payroll employment, based on the latest releases from the Bureau of Labor Statistics, grew 1.1% for all of 2025, up from the 0.7% increase in 2024. However, following the considerable downward revision to U.S. payroll employment for 2025, I expect when the U.S. Bureau of Labor Statistics releases its revised data in April, that overall payroll employment growth for the state in 2025 will be revised down as well. To illustrate the impact of the recent revisions by the U.S. Bureau of Labor Statistics on U.S. payroll employment, for all of 2025, the healthcare and social assistance sector added 697,000 jobs, whereas all other sectors combined resulted in a decrease of 516,000 jobs. This is why for much of 2025, job growth was reported to only be occurring in the eds and med sector, which refers to educational services and the healthcare and social assistance sector. Looking at the change in payroll employment in Mississippi by sector since February 2020, as of December, total non-farm employment in the state was up 3.7%, an increase of 42,800 jobs. The sector with the largest increase in employment since February 2020 remained the trade, transportation, and utility sector, which has added 16,800 jobs, an increase of 7.3%. The healthcare and social assistance sector added 11,600 jobs, an 8.5% increase. And the next largest increase occurred in the professional and business services sector, which added 10,100 jobs, a 9.1% increase. Some sectors remain below their February 2020 employment level, which includes the manufacturing sector, which was down by 5,300 jobs as of December, 3.6% decrease, and the government sector, which was down by 3,900 jobs, a 1.6% decrease. These two sectors are notable as they are some of the largest employers by sector in Mississippi. Comparing the change in Mississippi payroll employment from February 2020 as of December, the state continues to rank in the middle among all states, as the 3.7% increase ranked 24th among all states in December. 3 states remain below their February 2020 employment levels as of December, which are Vermont, Massachusetts, and Hawaii. Idaho continues to have the largest increase in employment since February 2020 of 14.6%. The change in residence employment in Mississippi since February 2020 as of December shows that employment is up 2.9%, an increase of 34,415 jobs, whereas unemployment is down by almost 25,000 jobs since February 2020, a 34.2% decrease. The labor force has added almost 9,500 individuals, an increase of 0.7%, and the civilian non-institutionalized population in the state is up 1.5%, an increase of almost 33,200 individuals. The change in resident employment in Mississippi since February 2020 as of December 2025 also continued to rank near the middle among all states, as the 2.9% increase ranked 26 among all states as of December. Several states continue to remain below their February 2020 levels in terms of residence employment. Most notable is Maryland, which was down by 4.7% as of December. Much of this was due to recent decreases in federal employment that occurred earlier in 2025. Texas continues to have the largest increase in residence employment since February 2020 as of December of 12.8%. Comparing job openings and hires in the United States as of December 2025 finds that the number of job openings in the U.S. decreased for the third consecutive month to just over 6.5 million, the lowest level since September of 2020. The number of hires in the U.S. actually ticked up in December to almost 5.3 million, which is still below the pre-pandemic levels of early 2020. Both the number of job openings and the number of unemployed in the United States decreased in December. However, the number of unemployed of 7.5 million remained ahead of the number of job openings of 6.5 million for the second consecutive month. Looking at the number of job openings and hires in Mississippi as of December finds that the number of job openings was 61,000, the second consecutive monthly decrease. The number of hires in Mississippi actually increased in December to 43,000. The job opening to hire ratio in 2025 in Mississippi was 1.5, which compares to a ratio of about 1 in 2020. This illustrates that the job market in Mississippi remains somewhat tighter than the U.S. market. Like the United States, the number of unemployed and the number of job openings decreased in December in Mississippi. The number of unemployed decreased to just over 48,000, and for at least the third consecutive month, the difference between the number of job openings and the number of unemployed in the state decreased. The job openings to unemployed ratio in Mississippi in 2025 was 1.2, which compares to a ratio of about 0.7 in 2020 and a ratio of about 0.8 in 2019, which continues to illustrate how the job market in Mississippi remains tighter than the U.S. job market. The labor force participation rate in Mississippi in December 2025 was 55.6, the same rate that has prevailed since July of last year. The U.S. labor force participation rate in January 2026 was 62.5%, up from the previous month, but remains in a relatively narrow range for most of 2025. Seasonally adjusted initial unemployment claims in Mississippi remain relatively low as of December at just over 5,000. This level remains below the 2019 monthly average of about 5,400, and unemployment claims in Mississippi have been below the 2019 level for several months. Similar to initial unemployment claims, the number of continued unemployment claims on a seasonally adjusted basis in Mississippi remained relatively low in December at a level of 31,500, well below the monthly average level from 2019. However, over the past 5 to 6 months, the number of continued unemployment claims in the state has trended up, which is a sign that the unemployed workers are taking longer to find employment compared to previous months. The level of initial unemployment claims in the United States continues to fluctuate, as we see as of the third week of February, the 4-week average was below the 2019 average level. However, for most of 2025, the 4-week average was above the 2019 monthly average. In contrast, continuing claims for unemployment insurance in the United States as of January remained well above the 2019 monthly average, as it has since the middle of 2023. This indicates a considerably longer time for unemployed to find new jobs compared to the first years coming out of the pandemic. Looking at other economic indicators, the commitment rate on conventional 30-year mortgages was about 6.5% as of the third quarter of 2025, and forecasts are that this rate will continue to decrease out through the end of 2027, as the rate is expected to decrease to 5.8% as of the fourth quarter of 2027. The level of building permits in Mississippi trended up slightly in the remaining months of 2025. However, the overall level of building permits is at about the same level it has been since the middle of 2024. The level of the University of Michigan Consumer Sentiment Index remains relatively low in historical terms. However, the rate has increased since November 2025, when it hit a 3-year low of 51. The rate ticked down slightly in January to 56.6%. This level continues to be associated with recessionary levels. However, it mostly reflects consumer opinion related to prices and inflation. Looking at the economic indicator of income tax withholdings in Mississippi, we find that the annual percent change in 2025 was a decrease of 1.1% on a nominal basis. When adjusted for inflation, this decrease increased to 3.4%, the largest real decrease since 2023. It's also the third consecutive year on a inflation-adjusted basis income tax withholdings in the state decreased. However, in 2024, not on a nominal basis, income tax withholdings in the state increased 1.3%. Income tax withholdings in the state are expected to continue to decrease on an annual basis, as we see continued decreases in the income tax rate in Mississippi. As of December, the Mississippi Leading Index of Economic Indicators increased for the third consecutive month to its highest level since July. The improvements in the index reflect improvements in a number of indicators, including consumer sentiment, as was discussed earlier. The 12-month change in the Consumer Price Index as of January 2026 was 2.4%, the smallest year-over-year change since May 2025, and the third consecutive month that the year-over-year change decreased. However, the government shutdown in October and November of last year may continue to impact the measurement of the Consumer Price Index. Also in December, the 12-month change in the Core Consumer Price Index, which is the Consumer Price Index less the more volatile categories of food and energy, was 2.5%, which was the smallest year-over-year change in the index in almost 5 years. The index has continued to trend down over the second half of 2025. Looking at specific categories of the Consumer Price Index, the 12-month change in energy CPI as of January was almost flat at minus 0.1%. This includes the impact of the decrease in gasoline prices, which as of January was down 7.5% compared to 1 year earlier. Consumer Price Index for food, however, was up 2.9% year over year as of January, which was a slight decrease from the previous month. The Consumer Price Index for new vehicles was up 0.4% on a year over year basis as of January. And the Consumer Price Index for shelter was up 3% in January compared to 1 year earlier, as shelter continues to be one of the main factors driving the increase in inflation in the U.S. And the increase for all items was 2.4%, as noted earlier, and the change in the core consumer price index on a year-over-year basis was 2.5% in January. Another measure of inflation produced by the Bureau of Labor Statistics is the Employment Cost Index. And as of the fourth quarter of 2025, the 12-month change in the Employment Cost Index for wages and salaries for all private industry in the U.S. was 3.3%. This was the first decrease since the first quarter of 2025, and the 3.3% year-over-year change was the lowest since the first quarter of 2021. A 12-month change of 3% is generally consistent with the Federal Reserve's goal of 2% annual inflation. In terms of monetary policy, the firm S&P Global Market Intelligence continues to project a 25 basis point cut in the federal funds rate will next occur in June of this year, which will be followed by another 25 basis point cut in September of this year. Once that second 25 basis point cut occurs, the target rate will be in what the firm believes is a neutral range of 3 to 3.25% by the fourth quarter of this year. Neutral range means that the federal funds rate neither stimulates nor restricts economic activity. Furthermore, the firm believes that the federal funds rate will stay in this neutral range through the end of this decade. Turning to the forecast, the assumptions behind the U.S. forecast made by the firm S&P Global Market Intelligence continue to be the same as they were last month, as the forecast was conducted before the recent Supreme Court ruling on the IEEPA tariffs that occurred last week. So the forecast assumes Section 232 tariffs of 10 to 25% as of the end of last year on copper, lumber, and pharmaceuticals, and critical minerals, which will be 10%. The Section 232 tariffs will be unaffected by the Supreme Court ruling of last week. These also include 50% tariffs on aluminum and steel. Now, the tariffs that were ruled illegal by the U.S. Supreme Court last week are the IEEPA tariffs, which were on China at a rate of 10%, Canada at 35%, and Mexico at 25%. That is the assumption in this month's forecast. Also assumes that the tariffs on Mexico and Canada will be down to 15% by the middle of this year. And the forecast also assumes that the so-called universal or reciprocal tariffs will range from 10 to 40%. Turning to the tariff developments last week, the U.S. Supreme Court, as I mentioned, ruled that the IEEPA tariffs were illegal. Under these tariffs, the overall effective tariff rate imposed by the United States was 16%. The administration has announced that they will impose additional Section 232 tariffs, and these will keep the overall effective rate only slightly lower at about 13 to 14%. So the impact of last week's ruling on the current forecast is probably relatively small. One big difference, however, is that these additional tariffs under Section 232 will require congressional approval over the next 150 days. Other estimates have computed that tariffs this year are likely to shave about 1 percentage point off of U.S. real gross domestic product growth. Looking at the annual change in U.S. real gross domestic product with baseline projections by the firm S&P Global Market Intelligence, we find that based on the most recent estimate of real GDP growth by the Bureau of Economic Analysis for the fourth quarter of 2025 means that for all of last year, U.S. real gross domestic product grew 2.2%, down from the 2.8% growth that occurred in 2024. However, this growth could change slightly as the U.S. Bureau of Economic Analysis releases its final estimates for the fourth quarter of last year. S&P Global Market Intelligence believes that U.S. real GDP growth will increase to 2.7% in 2026. Much of this has to do with the impacts of provisions in the One Big Beautiful Bill Act of last year, as well as potential impacts of artificial intelligence growth. However, for 2027, the firm believes that U.S. real gross domestic product will increase only 2%, as the benefits that will occur this year that I just mentioned will likely fade by 2027. The University Research Center's latest forecast of the annual percent change in Mississippi real gross domestic product for 2025 is 1.9%, a slight improvement from the previous month's forecast. However, 1.9% is still more than a percentage point decrease from the growth that occurred in 2024, as growth slowed in 2025 due to factors including higher tariffs. For 2026, the latest forecast projects that real gross domestic product growth in Mississippi will also be 1.9%. However, in 2027, the latest forecast is that real GDP for the U.S. will expand 1.2%, a decrease from the growth in 2026, and 1.2% would be the lowest rate of growth since 2022. The most recent release of employment data by the U.S. Bureau of Labor Statistics finds that U.S. payroll employment grew only 0.5% in 2025 following revisions. This is the smallest annual rate of growth since the recession in 2020. The latest projections by S&P Global Market Intelligence are for 2026 show similar growth of 0.4%, and again in 2027, as the latest projection is 0.5% annual payroll employment growth. Based on the latest data released by the U.S. Bureau of Labor Statistics, payroll employment growth in Mississippi for all of 2025 increased 1.1%. However, the U.S. Bureau of Labor Statistics has not performed its annual revisions on this data yet, and based on the considerable downward revisions to U.S. payroll employment in 2025, I expect Mississippi's employment growth will decrease as well. For 2026, consistent with the projections for U.S. payroll employment growth, University Research Center estimates that payroll employment growth in Mississippi will increase only 0.3%, and in 2027 we estimate payroll employment growth will be only slightly more than flat at 0.2%. The latest forecast of the annual change in the Consumer Price Index by S&P Global Market Intelligence finds an annual increase of 2.5% for 2026, very similar to the 2.6% increase that occurred in 2025. However, a slight increase is expected in 2027 as tariffs continue to work through the U.S. economy, as the CPI is projected to increase 2.8% for all of next year. To summarize the economic outlook, the U.S. economy is expected to grow an average of about 2% or slightly more per year through the end of the decade, based on the latest forecast from the firm S&P Global Market Intelligence. Most notable is that both the U.S. and Mississippi labor markets are expected to grow well below trend through the end of the decade. Current odds of recession remain relatively low at about 25% over the next 12 months. However, inflation is also expected to remain above the Federal Reserve's target of 2% annually through at least 2027. And most notably, lots of uncertainty remains in the U.S. economy regarding trade policy and other factors, which continues to have negative impacts on economic growth. If you would like to subscribe to our publications, you can email us to get on our list, and we will send you Mississippi Economic Outlook, which is released once a quarter, as well as Mississippi's Business, which is released once a month. You can also follow us on X or Twitter at Mississippi URC. Thank you for watching.